Welcome to Daily Wisdom from the Flippening podcast. These episodes feature short, to-the-point clips from our full-length interviews. We talk to the men and women behind the trades, crypto exchanges, and regulations with the goal of helping you become a better, more informed investor.
Hi, I'm Mike Kaplan, editor of the Flippening podcast. Today's episode is from a 2019 conversation with Tuur Demeester, founder of Adamant Capital, a Bitcoin alpha fund. We discuss Bitcoin's value as a hedge against systemic risk and the chances of it becoming an everyday unit of account. For the full conversation, check out Flippening episode 44. Now, without further ado, our conversation with Tuur Demeester from Adamant Capital. Enjoy.
If you invest for Bitcoin accumulation, you really have to very deeply accept and continue to work with the fact that Bitcoin is extremely volatile. Like that is probably the biggest challenge. Because if you look at the 10-year trend and if you look at kind of long-term and the baseline of the technology, I think it's pretty clear that it's going to stay around. But, you know, it's just emotionally, it's such a roller coaster to have years where it rallies by 400, 500%. And then there's other years where it crashes by 70, 80%. If you succeed in accumulating more Bitcoin and that, you know, over time rewards you with more wealth, I think what you've done is you've kind of beat the market in being willing to take on that volatility. And for most people, the way they do that is just by regulating their initial investment. Like if your initial investment is not that much, you know, kind of the mantra of don't invest more than you can afford to lose, then you will probably also be able to stomach the volatility. Or if you're lucky and you kind of get in at the bottom, then you never go underwater, so to speak. That's the ideal situation, obviously, if you invest right at the bottom and then Bitcoin only, it's very volatile, but it's always in the plus in dollar terms. That's, I think, very hard to obtain. Ideally, you want to pursue a combination of the two where, first of all, you think about how much do you want to invest in this market. And I think it's probably a good idea to approach it as some kind of insurance policy, like just how you get insurance against fires and theft and things like that. It's like an insurance for the rest of your portfolio. Like what if we have very high inflation in 10 or 15 years from now? How do I protect myself? What if there's another repeat of 2008 where there's all these things that are built up in the system that not enough people were aware of? What kind of asset would I want to own that could protect me against that? I think Bitcoin falls in that category, like next to gold, as like a hedge against systemic risk. And so do that first, decide on the kind of quantity you want to invest. And then secondly, you want to look at the cycle of Bitcoin and try to identify, ideally, I would say not exactly the bottom, but try to invest during the accumulation phase, which is usually when Bitcoin has had a big bear market, when retail is not interested at all, but when you see smart money at work, where you see infrastructure being built, where you see the price going sideways, ideally in a channel. I think those are the periods when you probably want to think about deploying that capital.
That makes a lot of sense. I liked what you said at first about this shift in mindset. I find it kind of interesting that most of, despite a large number of Bitcoin maximalists and, people who profess to be thinking in BTC, there aren't a lot of websites that will price crypto assets in BTC. There's not a lot of accounting solutions that allow you to denominate in BTC. And there's not a lot of people who could tell you how much a cup of Starbucks coffee costs in BTC or Satoshis or what have you. So it does seem like there's a bit of a Copernican shift in our financial world that needs to take place super early, between thinking of USD or whatever our local fiat is as the center of our financial world, to thinking around Bitcoin or whatever your favorite cryptocurrency is. Is that a switch that you've made with regards to like your personal accounting and thinking? What's your sort of unit of account as an investor?
I would say by and large, no. Like I have no idea what my utility bill is expressed in Bitcoin, for example. And I do think very long term, we could be heading in that direction where Bitcoin becomes basically a unit of account aside from a store of value and the other functions of money. But I think like in the short term, basically when people think about Bitcoin accumulation, what you're doing is benchmarking, really. I mean, it's so common in the fund world to have a fund that is benchmarked to the S&P 500 or benchmarked to global stock markets. And then the goal is to outperform that. It's just really, really common. And so that's kind of how I think it's useful to look at it. It's like, well, once you believe that, Google is the search engine that's going to dominate, then rather than investing in a basket of search engines in, 1994, 1995, which there were dozens of search engines back then, you could say, well, I'm just going to hold Google as a kind of core value in the search engine market niche. And then together with a few others, maybe those together are going to be a benchmark for me. So maybe more recently that would be like the FANG stocks or so. I mean, it's hard to come up with real analogies because of course Google is not a protocol. It's not like TCP/IP or the email protocol. Like it's really a private company, whereas the potential for Bitcoin to be a financial backbone is so enormous that I think thinking in terms of Bitcoin is probably more useful than thinking in terms of Amazon performance, because there's so many things that can cause a company to go off the rails that are less likely with a semi-ossified protocol like Bitcoin. Like Bitcoin is not going to change much. The only thing it needs to do is that continue to show that it's reliable and that things can be built on top of it for it to succeed long term, I think. Like just like, .com domain names, like the top level domain name space does not have to change much for .com to continue to be a valuable platform for you to register a domain name in. Because technically right now there's dozens. So Nomics.com, you could register Nomics.ind or whatever, but you chose .com because it's the standard and it communicates that, you are a serious business and all those kind of things. And so I think it'll be similar with Bitcoin.
That's it for today. If you like what you heard and want to support the show, please consider leaving us a review on iTunes, Stitcher, or wherever you listen to podcasts. If you decide to leave us a review after subscribing, we'll send you a free Nomics t-shirt. Just hit us up on Twitter at username NomicsFinance after you've left the review, and we'll hook you up. You may also be interested in Nomics.com, our crypto market cap and pricing website. Check us out at Nomics.com, spelled Nomics. Now stick around for our legal disclaimer. All opinions expressed by podcast hosts or guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions. The producers, hosts, and guests of the show may maintain positions in the companies or assets discussed today.